Well, we won't have to. Most people just save in Bitcoin. Bitcoin's going to go up very slowly and steadily versus everything. And it'll be very different as far as an experience from today's Bitcoin, which is kind of this roller coaster. In the future, Bitcoin is going to be the most stable thing you ever have. And so
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. In this video, Fred Krueger dives into the future of Bitcoin finance and explores the radical changes hyper-bitcoinization could bring to loans and traditional banking. Will banks adapt or will they vanish?
I think Bitcoin will be like, the old annuities or treasury bonds. When I started trading, those things were like paying 8%. And I think Bitcoin's going to be very, very safe, very boring, potentially even. But that's where most people are going to save their money. And the last prediction is financial advisors are going to have to find other jobs. What do I mean by that? Well, we have all these people right now sitting around telling you need to go 60-40 or 65-35, or you need to put a little bit of this, you need to tweak this. And all these people are completely and utterly useless. So they're going to have to find other jobs. The system is going to get much, much more simplified. And it's going to be much better. So anyways, that's my prediction for hyper-bitcoinization. Unfortunately, I don't think it's happening for another 20 to 30 years, so somewhere in that kind of time frame. So, in the interim, Bitcoin's going to appreciate probably 100x. So we are going to have this completely crazy and super, super profitable phase for everybody to invest in Bitcoin. And once we hit that sort of hyper-bitcoinization point, it's going to get very boring and it's going to simplify everything. So that's my prediction for the future.
Bitcoin's open interest has experienced a significant cooling, signaling a shift in market sentiment that could have profound implications for the cryptocurrency's trajectory toward $100,000. Open interest, which measures the total value of outstanding derivatives contracts, peaked during Bitcoin's euphoric rally in November, reaching $64.03 billion on November 22. However, as the month concluded, open interest fell to $60.17 billion, indicating reduced leverage and a cooling appetite for speculative trading. The decline in open interest coincided with a spike in liquidations, particularly among leveraged longs. As Bitcoin's price unexpectedly pulled back from its historic high of $99,800 to $90,742, liquidations reached $117.88 million on November 27, marking the second highest liquidation event of the month. This unwinding of leveraged positions suggests that over-leveraged traders faced significant losses, which may have contributed to a more cautious market environment. Bitcoin's dominance also took a sharp hit, falling from a 12-month high of 61.53% on November 21 to 47% by the end of the month. This decline in dominance indicates a liquidity shift from Bitcoin to altcoins, as investors diversified or took profits from Bitcoin's rally. Despite a recovery to $96,532, the diminished momentum and declining leverage reflect a market recalibrating after a period of exuberance.
I think we have to think of Bitcoin as really something that is once in a lifetime or once in multi-generation kind of innovation. It's like electricity. It's like the internet. It's something really enormous, and it's going to have some major, major impact, a lot more than just a small impact. People are going to have 2% of their... No, it's going to be much bigger than that. So my first prediction is, I really urge you to think about this. I think that the unit of account for all transactions will be Bitcoin. Now, what do I mean by that? I mean that when you go to buy an espresso, that espresso is going to be priced in sats. When you go to take out a loan for a mortgage for a house, that mortgage will be priced in sats. Your salary, if you have a job, you will be getting a certain amount of satoshis per month or per every 2 weeks. So I think the number one most important thing is that the unit of account is going to move from dollars, yen, won, and euro to sats. And I think that's going to happen over the next 30 years. I think we are going to replace these obsolete currencies with the new world currency, which is going to be Bitcoin. Prediction number 2. What if you want to have Bitcoin and you need to borrow Bitcoin? How's that going to work? Well, it's going to be done in Bitcoin for Bitcoin. So let's say, for example, I need to borrow $100,000 to remodel my house because somebody was asking this. How am I going to do that? Well, right now today, 100,000 is about 1 Bitcoin. So I basically would borrow 1 Bitcoin, and I might have 2 years to pay back 1.2 Bitcoin. So the thing you're borrowing is going to be Bitcoin. The interest is going to be paid in Bitcoin. Who's going to lend you that? Well, somebody with some Bitcoin is going to lend you that. It doesn't have to be fractional. It's not going to be fractional lending. It's going to be somebody with 1 Bitcoin who wants to turn that 1 Bitcoin into 1.2 Bitcoin. Perhaps somebody like me who wants to increase their Bitcoin. So now, if you start thinking about that, you're like, well, wait a second. If everybody saves their Bitcoin, nobody will want to lend their Bitcoin. Well, that's not true. People are going to spend their Bitcoin. It's going to be spent every single day because that's what we do. We consume. We evolve. Things move through the system. And as Bitcoin is spent, places that it gets spent more efficiently and the places that increases in value will get loans in Bitcoin. So it's a very different paradigm than where we are now, but it completely can work. There's no reason why it can't work. So prediction number 2, all loans will be done in Bitcoin and no fractional lending.
Robert Kiyosaki, the famed author of Rich Dad, Poor Dad, is once again urging investors to act decisively, warning that Bitcoin's looming ascent past $100,000 could permanently lock out the middle class from meaningful participation in the cryptocurrency market. Posting on X, Kiyosaki described the anticipated price milestone as a tipping point where Bitcoin will become the domain of the ultra-wealthy, corporations, banks, and sovereign wealth funds, leaving the average investor priced out and unable to accumulate significant holdings. Known for his distrust of fiat currencies and traditional financial systems, Kiyosaki emphasized the urgency of investing in alternative assets like gold, silver, and Bitcoin. He called for individuals to overcome hesitation and start small if necessary, purchasing even modest amounts of these assets to safeguard their financial future. Don't be left behind, he warned, encouraging investors to embrace the fear of missing out, FOMO, as a motivator to act before it's too late. Kiyosaki argued that investing in gold, silver, or Bitcoin is not just about wealth preservation, but also about gaining financial wisdom. He advised setting monthly goals for acquiring these assets, emphasizing that the process of disciplined investing builds both wealth and intelligence over time. Criticizing policymakers for devaluing fiat currencies, he urged individuals to protect their wealth against what he described as fake money, eroding purchasing power. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.